CEO Carlos Tavares noted that the strong focus by employees on operational excellence and synergies execution led to achieving very strong H1 financial results.
Jeep and Ram just dropped an absolute bombshell that's sending shockwaves through the entire auto industry. In a move no one saw coming, both brands have decided to slash prices by up to 50%. Yes, 50%, on some of their most popular models. The announcement is shaking dealerships, rattling competitors, and sending customers rushing to showroom floors. But what's really behind this sudden price collapse? Why are two of America's most iconic truck and SUV brands slashing prices like never before? Something much bigger is happening beneath the surface. Let's start with the shocking part, the deals themselves. Jeep has reportedly cut prices on models like the Grand Cherokee, Compass, and even the Wrangler, while Ram is dropping prices on its 1500 and 2500 pickups. We're talking discounts that were unheard of just a year ago. Trucks that used to sell for $60,000 are now dipping below $35,000. Dealers are literally advertising half-off sales on vehicles that were once considered luxury-level workhorses. It almost sounds too good to be true, but it's very real. The reason? Massive inventory overload. Stellantis, the parent company of both Jeep and Ram, has been sitting on thousands of unsold vehicles clogging up lots across the US. After months of weak demand and higher interest rates, dealers simply can't move them. Consumers are holding back, waiting for prices to crash, and that's exactly what's happening right now. Stellantis is being forced to make desperate moves just to get vehicles off lots before the 2026 models arrive. But there's another layer to this story, a deeper, more concerning one. See, Jeep and Ram were supposed to be Stellantis' golden brands, leading the charge into electrification and premium pricing. The company invested billions into electrified models like the Jeep Recon and Ram Rev, promising a bold new era for American trucks and SUVs. But those EV dreams are hitting a wall. Sales are tanking, consumer interest is fading, and production costs are skyrocketing. The electric revolution that Stellantis banked on? It's turning into a nightmare. Meanwhile, competition from Ford, Toyota, and even Chinese automakers is intensifying. Ford's cutting F-150 Lightning prices, Toyota's launching cheaper hybrid trucks, and brands like BYD and Chery are preparing to flood the market with ultra-affordable models. Jeep and Ram suddenly look overpriced and outdated. Stellantis knows it can't afford to lose American buyers, so it's hitting the nuclear button, slashing prices to stay alive. And let's not forget, consumers are changing fast. People are tired of paying $800 a month for a vehicle. Inflation, interest rates, and job insecurity have crushed buyer confidence. Families want practical, affordable options, not $70,000 luxury trucks. Ram and Jeep are finally realizing that the old strategy of bigger, flashier, more expensive just doesn't work anymore. But make no mistake, this price cut isn't a sign of generosity. It's a sign of panic, a last-ditch attempt to stop an avalanche of unsold inventory, falling sales, and collapsing brand loyalty. And the ripple effects? They're about to hit the entire US auto market like a tsunami. Competitors will be forced to respond. If Ram can sell a 1500 for $35K, how long before Ford or Chevy are forced to match those prices? This could trigger the most brutal price war the truck market has seen in decades. And what does that mean for used vehicles? Prices could crash even further. Dealers who stocked up during the boom years are already panicking as resale values plummet. The entire used truck segment, from F-150s to Silverados, is about to feel the heat. It's a domino effect that's just getting started. But here's where things get even more interesting. Jeep and Ram aren't just slashing prices for short-term survival. There's growing speculation that Stellantis is quietly restructuring its entire US strategy. Some insiders claim this move could pave the way for factory closures, mass layoffs, or even brand consolidation. The company is bleeding cash in North America, and with the EV transition faltering, drastic measures might be on the table. And while consumers are cheering for lower prices, investors are terrified. Stellantis' stock has already shown signs of weakness as analysts warn that this kind of fire sale pricing destroys long-term profitability. You can't build a premium brand when you're cutting prices in half. It sends a message of desperation. And once you teach customers to wait for discounts, it's nearly impossible to raise prices again. But this isn't just about Stellantis. This could redefine the entire American auto landscape. If one of the biggest players in the truck and SUV market is struggling this badly, it raises the question, who's next? Ford? GM? Could this be the beginning of a broader market collapse? The moment the auto bubble finally bursts? Because remember, car prices have been artificially inflated for years. Pandemic shortages, corporate greed, and cheap financing created a pricing bubble that's now collapsing under its own weight. And Jeep and Ram's sudden 50% price cuts may be the first crack in the dam that finally breaks the entire market wide open. The signs have been there for months, slowing sales, growing inventories, and dealerships filled to the brim with unsold cars. But now, it's official. The correction has begun. And once consumers realize they can get top-tier trucks and SUVs for half the price, demand for new high-priced models could completely vanish overnight. And this is where Stellantis faces its biggest gamble yet. These price cuts might temporarily boost sales, but they risk permanently damaging the perception of Jeep and Ram as premium American brands. For decades, these names stood for rugged reliability, off-road strength, and blue-collar pride. But if customers start associating them with clearance sales and bargain bin deals, that heritage could crumble fast. And yet, Stellantis seems willing to take that risk, because the alternative might be worse: stagnation, layoffs, and a total market collapse. And that's exactly what has industry insiders worried. Stellantis isn't just reacting to a short-term problem, it's fighting for survival in a market that's changing faster than anyone expected. The old formula, build big, sell big, and charge big, no longer works. Buyers are walking away, interest rates are suffocating loans, and trucks that once symbolized success are now gathering dust on dealer lots. Jeep and Ram are being forced to tear down their own playbook and start from scratch. Behind closed doors, executives are scrambling to come up with a new identity for both brands. For years, they've marketed Jeep as a lifestyle brand, rugged, adventurous, freedom on four wheels, and Ram as the symbol of American power and durability. But the modern buyer isn't impressed by slogans anymore. They're looking at numbers, monthly payments, fuel economy, repair costs, resale value. Emotion has taken a backseat to economics. And when your family budget is stretched thin, saving $25,000 on a new truck suddenly looks a lot more appealing than buying into a brand image. Dealers are feeling the pressure too. Many of them have been begging Stellantis to act for months. Showrooms filled with unsold Wranglers and Ram 1500s have become financial deadweight, draining cash flow and forcing dealers to offer their own discounts just to stay afloat. When Stellantis finally dropped this bombshell, some dealers called it a lifeline, others called it a death sentence. Because while lower prices might bring in more customers now, the profit margins are evaporating. Every sale is a smaller win, and for some, it's barely breaking even. And the chaos doesn't stop there. Suppliers who build parts for Jeep and Ram are watching production schedules get slashed. Orders are shrinking. Factories that once ran 24/7 are suddenly sitting idle. Thousands of workers are bracing for what could be another wave of layoffs if Stellantis decides to cut production further to balance the books. This isn't just a price war. It's a chain reaction stretching across the entire automotive supply network. What's more concerning is how quickly consumer trust can shift. Just last year, Jeep and Ram were pushing limited edition trims with sky-high prices, special badges, leather seats, luxury tech, and now those same vehicles are being offered at clearance prices. Imagine being a customer who bought a $70,000 Ram Rebel 6 months ago, only to find out today it's selling for $40,000. The frustration is real. It damages loyalty, erodes confidence, and turns once proud owners into skeptics. And as this plays out, other automakers are watching nervously. Ford, GM, Toyota. They all know that if Jeep and Ram normalize this level of discounting, it could trigger a race to the bottom. None of them want to slash prices because it destroys resale values and brand prestige, but they also can't afford to lose market share. The moment one brand moves, everyone else is forced to follow. And that's exactly the kind of domino effect that can send the entire market into a freefall. Meanwhile, Stellantis is trying to spin the move as a customer-first initiative, claiming the price cuts are about making vehicles more accessible, expanding market reach, and giving buyers more value. But the numbers tell a different story. This isn't a strategy born from strength. It's survival under pressure. The company's North American profits have been shrinking quarter after quarter, while European and Asian markets are showing signs of weakness. With their EV investments bleeding cash and interest rates killing demand, Stellantis is cornered, and desperate times call for desperate measures. What's really alarming, though, is the timing. These cuts are coming right as new models, the all-electric Ram Rev and the next-generation Jeep Wagoneer, are supposed to enter production. Those vehicles were designed with high prices in mind, banking on premium margins. But now, in a market where consumers are expecting deep discounts, how can Stellantis sell those EVs at a profit? The math doesn't add up, and it's not just Stellantis that's vulnerable. The entire American auto industry has been walking on thin ice for years, using high prices, easy financing, and limited supply to inflate profits. But with supply chains stabilizing and consumer demand collapsing, that strategy is falling apart. Jeep and Ram just happen to be the first major brands to publicly admit the truth. The bubble has burst. Yet the most intriguing question remains. Is this the start of a long-term reset or just a temporary panic move? Because if this becomes permanent, it could mark the end of an era for American trucks and SUVs as we know them. For decades, automakers built bigger, heavier, more expensive vehicles to chase higher margins. But if consumers refuse to pay those prices anymore, the entire system, from design to production to marketing, has to be rebuilt. And right now, Stellantis seems to be the first one taking that painful leap. Whether it's bravery or desperation remains to be seen. But one thing's for sure, this 50% price cut has just changed everything. Because what's happening right now isn't just about trucks or SUVs. It's about a corporate reality check that's been long overdue. For years, automakers got away with inflating prices, tacking on luxury packages, and convincing buyers that a pickup truck should cost as much as a small house. But the illusion is finally breaking. Consumers are fighting back with their wallets, and Jeep and Ram are the first major brands to crack under the pressure. And let's be honest, Stellantis isn't the kind of company that makes bold moves out of goodwill. This 50% slash signals something much deeper behind the scenes. Insiders are already whispering about massive restructuring plans, talk of factory slowdowns, canceled EV projects, and even a possible merger or divestment within the Stellantis empire. Some analysts believe the company might be preparing to quietly scale back its American footprint, shifting resources toward Europe and Asia, where regulatory incentives for EVs are stronger and markets are easier to control. But if Stellantis retreats, what happens to American workers? Jeep plants in Toledo and Ram factories in Michigan and Illinois could be hit hard. Thousands of UAW members are already nervous after months of rumors about cutbacks and production halts. The company insists jobs are safe, but we've heard that line before, right before layoffs hit. The truth is, when companies start slashing prices this aggressively, it's usually because they're trying to buy time, and time might be running out. The numbers don't lie. Dealership inventories have ballooned to their highest levels since before the pandemic. Vehicles are sitting for months without buyers. Financing approvals are dropping. And with the Federal Reserve holding interest rates steady at painful highs, fewer Americans can even qualify for auto loans. That's a deadly combination for a brand built around high-priced models. You can feel the tension on the ground. Dealers are calling this both a miracle and a warning. Some are selling trucks faster than they can restock them, while others say it's only a matter of time before profit margins collapse completely. Consumers are thrilled. Finally, they can afford the vehicles they've been priced out of for years. But for the industry, this is like a dam breaking. Once prices fall this low, it's nearly impossible to raise them again. And the ripple effects are already spreading. Used car auctions are starting to panic as values on late-model Rams and Jeeps tumble overnight. Banks are tightening lending standards. Leasing companies are recalculating residual values because what was worth $50,000 yesterday might only be worth $30,000 next month. The entire financial ecosystem built around inflated vehicle prices is beginning to crumble, and Stellantis may have just triggered the collapse. Meanwhile, competitors are scrambling behind closed doors. Ford's executives are reportedly holding emergency meetings to discuss potential incentives on F-Series trucks. GM is evaluating deeper discounts for Silverado models to keep pace. Even Toyota, which has stayed relatively insulated, is feeling the heat, especially as hybrid buyers begin comparing prices and realizing they can now buy a full-size Ram for the cost of a mid-tier Tacoma. The psychological shift among consumers is just as dramatic. For years, Americans were told vehicle prices would never go back down, that supply chain issues, inflation, and EV transitions justified the cost. But now, seeing Jeep and Ram slash prices in half, buyers are regaining control. They're waiting, holding out, demanding better deals. And that's creating a dangerous cycle. As more people wait for prices to drop, dealers are forced to discount even more. The downward spiral has begun. And the scary part? This isn't just a Stellantis issue. It's the early sign of a total market correction. Automakers have been sitting on an artificial pricing bubble since 2020. When chip shortages and production cuts allowed them to raise prices, they got hooked on those profits. But that high can't last forever. Consumers are maxed out, loans are defaulting, and vehicles are no longer selling like they used to. The entire industry has been pretending things are fine, until Jeep and Ram finally admitted they're not. Behind the scenes, you can bet investors are furious. Cutting prices in half might move inventory, but it destroys profit margins and shakes confidence in the brand's future. Stellantis shares could face serious pressure as analysts start asking tough questions. Questions about sustainability, long-term planning, and whether these brands can even survive another year of shrinking demand. Because if this trend continues, it won't just be about discounts, it'll be about survival. And perhaps the most overlooked part of this crisis is the emotional fallout among loyal customers. Jeep and Ram have built decades of heritage on American pride, craftsmanship, and toughness. But now, those same loyalists are starting to feel betrayed. They paid premium prices believing in the value and strength of the brand, only to see those same models slashed to half the cost. That's not just bad for business, it's devastating for brand trust. Yet in all this chaos, Stellantis might actually be setting a precedent. Maybe, just maybe, this price collapse is the first step toward resetting a broken industry. For years, automakers have stretched consumers to the limit. Now, Jeep and Ram's move could force everyone to confront the reality that vehicles have become unaffordable for the average American. And if that sparks a broader industry shift toward realistic pricing and better value, this chaos might just lead to a revolution. But before we call it a turning point, one thing's clear. Stellantis has taken an enormous gamble. Slashing prices this aggressively could backfire spectacularly if sales don't recover fast enough. And with new EV rollouts on the horizon and economic uncertainty still looming, the clock is ticking. And that's where things stand. Jeep and Ram just detonated the biggest price bomb the auto industry has seen in years. What started as a desperate move to clear lots might just reshape the entire market. Prices are falling, competition is heating up, and the illusion of endless profits is finally cracking. For consumers, this could be the best opportunity in decades to grab a new vehicle at a fraction of the cost. But for automakers, it's a warning shot. Adapt fast or get swept away in the collapse that's already unfolding. Because one thing is certain, this isn't the end of the story. The storm that Jeep and Ram just unleashed is spreading fast, and the next few months will decide who survives the chaos and who disappears from the road entirely. If you found this breakdown eye-opening, make sure to subscribe and turn on notifications because we're tracking every twist in this unfolding auto market meltdown. The next big price drop, the next major announcement, or the next automaker in trouble. You'll hear it here first. Thanks for watching, and buckle up. The road ahead for the auto industry is about to get a lot rougher.